This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody across Bloomberg platforms. I'm Carol Massar. Tim is out today on assignment in Atlanta. David Gura is in the house here in New York.
Glad to be here.
Good
Filling in for Tim. Nice to see you.
Nice to see you. On a day where it kind of feels like there's stuff going on, but I don't know, the market seemed to be okay.
Yeah, those inflation data kind of coming in as analysts and economists expected, but still having an effect on the markets today as it kind of makes people come around to the conclusion that September, we're likely to see a cut when the Fed meets next time.
I'm guessing Mike McKee's going to say, hold on, everybody.
No doubt.
All right, we're going to get to him in just a moment. We're also going to talk about China's maneuvering, because, David, it feels like this new world order feels like the train has left the station, certainly with tariffs. Things are going to be different because of the U.S. actions, and you see China moving a lot.
Yeah, trying to consolidate some of its influence with other members of the BRICS group. And of course, we've seen the tariffs that have been imposed on India and other countries as well. We'll see if that's leading to anything tangible, if it's more bite than anything else.
That's a really good point. And we're going to also talk about alt energy, everybody. We've got Bloom Energy with us. Shares are on a tear. What's interesting in an alt energy world where I feel like the administration's backing off, not necessarily for some of these names.
And of course, like so much tied to AI, artificial intelligence, and the need to fuel all these data centers that are being built across this country and around the world.
I always think, what happens when the spending stops?
There you go.
All right, folks, we got a lot coming your way in 60 minutes. Stick around, David and I, here on Bloomberg Businessweek Daily. Right now, though, a check on the trade with Charlie Pellet.
Hi, thank you very much. We are on track for a record close on the S&P 500 index. Just under 2 hours to go until that bell clangs on Wall Street with the Dow. The S&P, NASDAQ solidly in the green. S&P topping 6,400, hitting a record now, up 1%. We got the S&P up 66, the Dow up 493, Dow Industrials up 1.1%, NASDAQ also at a record up 1.2%, and the Russell 2000 index of small cap shares surging now by 2.5%. The 10-year CPI Tuesday, 4.29%, the 2-year 3.72%, spot gold up $6 the ounce, 33.49, up 0.2%, and West Texas Intermediate crude down 1.1%. 63.24 for a barrel of WTI. Bitcoin to 119,377. Bitcoin now up by 0.4%. Bottom line here, stocks are at records. AI startup Perplexity says it will make a formal offer to acquire Google's Chrome browser for $34.5 billion in anticipation of requirements that may be imposed on the search giant in antitrust proceedings. A Perplexity spokesperson said the unsolicited bid was sent to Alphabet's Google this morning. Right now, we've got Alphabet shares up by 1.3%. So again, recapping, stocks higher. S&P right now at 64.39, up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with David Gura. Tim is out on assignment. We'll be back tomorrow. So, hey, we want to talk a little bit about the inflation report because, David, as you mentioned at the top, I mean, it really did feel like investors like what we got, that there wasn't any kind of big surprise here.
Yeah, just to give everyone an update on what we did learn, the core consumer price index, excluding that often volatile food and energy categories, increased by 0.3% from June, from the month before. That's according to the Bureau of Labor Statistics data that was released this morning. Largely in line with what economists were forecasting, Carol, and on an annual basis, it picked up to 3.1%.
It's one of those, okay, yes. Not worse than could have been. All right, let's get more on the release, the outlook for U.S. inflation and really Fed policy. With us is Bloomberg TV and Radio International Economics and Policy Correspondent, of course, our Michael McKee. He's here in studio. And also with us is Pooja Sriram. She is Vice President of U.S. Economics Research over at Barclays. She's joining us from New York City. Welcome to both of you. So, Mike, for those who maybe, I don't know, slept in on this Tuesday. What do we need to?
Not you, Mike.
It wasn't Mike. What do we need to know about the inflation print this morning?
Well, I think what you want to say is don't count your chickens before they're priced, because there is some evidence of tariff pass-through in these numbers. There's maybe some evidence that Chris Waller's right, that it's a one-time increase, because we saw things that went up in price last month because of tariffs come down. So it may be a one-off, but it may be a continuing one-off that pushes inflation higher, because you saw things like used cars go up 0.5%. New car prices, which had been declining, are now flat, which the president claimed as a victory. But then you look at the profit margins for the automakers in the second quarter, and they were all minuscule or negative because they're absorbing it. And they're not going to continue to do that. So there is no proof that the tariff issue is over in these numbers. And the other aspect of it is
we haven't figured out all the details with some of our big trading partners.
Services prices have gone up.
Yeah.
They went up more than anticipated. So that's something that doesn't have to do with tariffs, but is a concern to economists, and it'll obviously be something the Fed wants to watch.
Could you pick up on that, if you would? I was looking back at a recent note that you wrote before these numbers came out this morning, and you said that while firms intend to raise prices, they've been resorting to other mitigation measures first. What did these data this morning tell you about the way the economy has been reacting, is reacting to the president's trade policies?
Yeah, sure. Great question. The release this morning was, to us, a pretty mixed bag. What was interesting is a lot of the acceleration that we saw in core CPI came from the core services component. Core goods prices were up. Inflation was, on the core goods side, still at 0.2%, very similar to what we saw in June. But really, the increases in prices, they're not as broad-based as one would have expected. Now, to be clear, we think it's too soon for us to conclude that the tariff pass-through is not happening or is more muted. We do think there are a couple of things that could have happened in July, which just made the core goods side of the report look a little softer. One is, if you remember, July was a big promotion period. We did have an Amazon Prime Day event that lasted longer than usual. And we had similar promotions from retailers like Walmart and Target. So it's plausible that we just had, slightly lower looking prices this July than we did last July. And if you look at some of the details within categories, that seems to corroborate with this narrative. But I also will allude to what McKee pointed out earlier. We are seeing signs of early tariff pass-through already in the economy. Within the CPI release itself, we've been flagging for a while that household furnishing prices, for example, are up 3% just year to date. This is very different from how prices historically have behaved. Something very similar can be said about appliances in the US. So I just think tariff effects are in train. And while today's report may not suggest that we are seeing much tariff effects, I just think it's too soon for us to dismiss that effect altogether.
Mike, let me ask you, if I could, about housing. We looked at these data for some indication of those costs as well, and we have for many months now. What is it telling you about the state of the housing market in the U.S. today?
Well, we're not seeing price declines, but certainly the price increases have leveled off. This is the third month in a row that owner's equivalent rent was up 0.3%. And on a year-over-year basis, we see slight declines here in home prices. We're seeing in the more immediate data, the Case-Shillers and things like that home prices are not rising as fast because at this point, people have given up on selling, it appears. And so they're not raising prices because it's a seller's market. But let's see what happens going forward. The interesting question is going to be, how does the housing market recover? Is a Fed rate cut or two going to be enough? How much does it have to go down before people get out there and start buying again?
One thing I wanted to ask both of you, and Mike, let me start with you first, is that I think I heard it on Surveillance this morning, the idea or the concept of it's not just the number and where it goes to, but the percentage of the increase or decrease. So when we think about that, I mean, I know the numbers came in line, but what we've seen in terms of trends in inflation, are we seeing it continue to kind of move down in a significant way, like that percentage change?
If you if you have a Bloomberg, go ahead and put in CPI YOY index GP and graph it. And in the last 2.5, 3 months, the inflation arrow has changed from going down and to the right to going up and to the right. It's not been a huge change yet, and we don't know for sure that that's going to happen or if it's just going to continue to steadily rise. But it definitely shows the inflation trajectory has changed.
All right, so let's cut to the chase. What does this mean for the Fed? Pooja, weigh in on this. I know Mike tends to say, and he's always right about this, that there's a lot more data coming our way before the next Fed meeting. So has this changed anything for Jay Powell and company?
Well, I think not. The Barclays baseline for a while now has been one rate cut and all the way at the end of the year in December. Now, we're looking quite out of consensus, admittedly, but we think, there is a lot of data to come. Nothing in this inflation print to us was suggestive of inflation being more muted or the tariff effects are not coming. So we do think that, the next employment report is going to be the big one to watch out for. Also, we're going to hear from Chair Powell at Jackson Hole. And so we think those would be good signals to watch for. But right now, we maintain our call. The Fed is in no rush to cut rates, and we have a call for December.
I believe Mike's getting his cowboy boots
you
ready.
Mentioned Jackson Hole, and Mike lights up. You can't see it on the radio.
We're getting ready for
TV and YouTube. You can. But Mike, how are you sort of thinking about the way this influences Fed decision making going forward? The report today, and of course, sort of what this might tell us about the PCE report coming up a little bit later.
Well, I think it puts them in the category of if we get the same numbers that we've gotten, and by that I mean inflation numbers and another round of bad jobs numbers, the Fed might be more inclined to cut. But when you parse who the voters are and what they've said since the last Fed meeting, you got about 2 people who think they should go down, 2 people who think they should not, and 2 people who are undecided. The rest have yet to weigh in. So we will hear more over the next couple of weeks, including from the chair, and we'll see where they are going into September. But again, there's another jobs report and another CPI report and a PCE inflation report. And so there's a lot of information to come that will help decide what's going to happen. The odds are now 96% that they cut in September, but I wouldn't put money into that market right now.
I feel like I've seen this movie before.
Yes.
Expectations that change very quickly on a data point. Michael McKee, thank you so much. Always appreciate it. And of course, Pooja Sriram, Vice President of U.S. Economics Research at Barclays. Hey, coming up later next week, do join us for our live coverage from Jackson Hole. We'll be on the ground in Wyoming. Well, we meaning Mike and team, covering the Kansas City Fed's annual economic policy symposium and highly anticipated remarks from Fed Chair Jay Powell. All happens and starts Wednesday, August 20th, and finishes up with a special edition of Bloomberg Surveillance. Tom Keene, Lisa Bromowitz, and the one and only Mike McKee will all be part of that special starting at 9 a.m. Eastern on Friday. All right, that's our economic stuff. We got to talk a little bit about tech and stuff going on there.
Stuff is happening in markets and business as well. So let's give that reminder that amid all of this eco news, speculation about the Fed and tariff impacts, companies are moving on and investing, doing deals or trying to. And we got that today when AI startup Perplexity said it made a formal offer to acquire Google's Chrome browser for $34.5 billion. I say startup. Maybe startup is diminishing the muscle of this company, but in anticipation of requirements that may be imposed on the search giant in antitrust proceedings. Seth Feigerman joins us now here in studio to talk more about that. Perplexity, talk a bit about why it would do this, what's in it for them, and sort of the opportunity they see here. We had this, of course, court decision when it comes to Google. We're waiting for kind of the final contours of what that decision means. But why is Perplexity out making this offer now?
Yeah, thanks for having me. Perplexity has spent the last couple of years trying to challenge Google in search. It's actually built by a guy who worked at Google or Google DeepMind. And over the last few months, they've been trying to branch into browsers. The idea here is take AI products, AI agents that we and others have been writing about, inject that into the browser that billions of people use every day. And so when you're looking up, where to go on a map or reading a Reddit thread, you have an AI agent that's actually kind of sitting along with you and kind of changing that web experience for you. Why go for Chrome? Well, you can build that up from scratch, which is what they've currently been doing, but you got to fight for every user, or you can go for a platform that has 3 billion users and just claim that overnight. That said, like you said, a lot of money, long shot bid. They do not have this much money on their own. They're claiming they've lined it up. So.
What's their latest valuation?
Most recently, we reported $18 billion. They've raised more than $1 billion. Nothing to sneeze at, but what they are bidding here is more than twice what they've been valued at and far more than what they've raised. This is a cash burning startup like every other AI startup that we covered. They're claiming that they have investment funds that are ready to put forward the amount of money that they said they have bid here, but this is a company that's made pretty bold long shot bids before, including for TikTok. We've yet to see them, put up or shut up. We've yet to see them do it, but it gets a lot of attention. So,
Seth, describe the opportunity, the moment they're doing this now. So we had that antitrust loss by Google in that court case in Washington, D.C. We're waiting for Amit Mehta, the judge there, to kind of outline more about what's to come next. But Google is in this predicament now where it seems like it's going to have to offload this part of the company. Sort of describe the circumstances that Google is in here and why this has been an opportunity.
Yeah, I think it's safe to say that this is probably the most dynamic and uncertain moment in the browser wars that I've seen in the past decade.
It's kind of amazing.
Yeah, I mean, Chrome has really been the dominant force for more than a decade after it rose ahead of Internet Explorer, and now there's a possibility that they are forced to divest this product. And suddenly you have not just Perplexity, but OpenAI, everyone's favorite AI startup, that are also vying to rethink the browser around AI. Google has already sort of been on the back foot a little bit, catching up on AI and search, but suddenly it might also change its market position with the browser. Google has also been rethinking the browser around AI, and I'm sure they're not alone. There are smaller browser companies that we don't cover every day that are doing this too. But it's a lot of activity, it's a lot of interest, but for the first time in years, it's no longer clear who the front runner will be in a few years from now.
I'm a little confused though, because with all of the chat bots and ChatGPT, right? And even Google understands, right? Alphabet understands kind of what it is facing in terms of what has been its bread and butter, right? In terms of an AI world. So I'm just curious, do they really need this? Can't they come up with a chatbot rather than
does
buying
Google
a browser?
need it or does Perplexity need it? Perplexity, I think that they are making a bet that
if we're moving towards a ChatGPT or Gemini, right, with Alphabet, like I'm just trying to...
I think that they are making a bet that if they're going to be increasing AI functionality, they want to put that in front of people as they're using the internet every day. And increasingly, the direction that we're seeing these companies move is not just you type in something into a chatbot and it gives you a pithy response, but that it'll actually kind of surf the web along with you. It'll do tasks on your behalf. And what better way to do that than plug it into the browser? We'll see if that bet pays off, and if it's worth $34.5 billion or whatever it ends up being, but that's the bet.
Well, put a fine point on it. I'm going to ask you to do that in terms of just how much search has changed here, the way that we have experienced and used it, and how AI is reshaping the way that this mechanism works.
Well, look, you can clearly tell from my voice that I'm skeptical of this offer, but if you step back, Perplexity is also a case in point of how much it has changed. If you had said 2 or 3 years ago, we would have a would-be rival to Google that is valued at $18 billion and has raised more than $1 billion and is vying to take Chrome, would have laughed you out of the room. And all of a sudden, it's still a long shot bid, but it's a testament to the fact that OpenAI, Perplexity, and others are rethinking the day-to-day search experience. It's no longer enough to just have 10 blue links. You expect something more dynamic, sort of a one-stop shop. And that's what these products offer you.
Unsolicited bid, do you expect more? Do you expect this is the start of more?
Certainly, if the judge ends up ruling in the way that the government is hoping, then there's no choice. There will be a lot more bids. I don't think this will be one and done. So
not exactly AOL and Time Warner, right? But it's like kind of, I don't know. I'm just not quite sure. Anyway, you don't think it's going to happen?
Well, this one I don't know, but there'll be more deals.
All right, Seth, thank you so much. He's Bloomberg News AI editor joining us in studio. Hey, coming up next, President Trump's tariff reorg and its possible impact on relationships being forged by the other global economic might. I am watching China so carefully.
Absolutely. And as somebody who just got back from Brazil, you see the influence that country has in that part of the world and certainly in others as well. Interesting to see how these trade talks play out. Of course, that 90-day pause extended once again to November. We're going to dig into that, what China, India, Brazil, and more are doing here when Bloomberg Businessweek continues on Bloomberg Radio and Bloomberg Television.
If It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks continuing to push higher. In fact, best level of the session right now. S&P 500 index at a record. NASDAQ Composite Index at a record. The Dow right now up 518 points for the Dow. That is a gain of 1.2%. The S&P at 6442 now, up 69 points, up 1.1%. NASDAQ Composite Index up 277 for NASDAQ, a gain of 1.3%. The Bloomberg Mag 7 Index up 1.1%. The Russell 2000 Index up by 2.7%. 10-year 4.29% with a 2-year that's currently yielding 3.72%. Spot gold up 0.2%, 33.49 the ounce. And West Texas Intermediate crude now lower by 1.2%, 63.17 for a barrel of WTI. Stocks surging as an inline inflation reading bolsters speculation that the Fed will have room to cut rates in September. Match Group has agreed to pay $14 million to permanently stop misrepresenting guarantees and locking consumers out of paid-for accounts. Also, will simplify Match.com's cancellation processes to resolve Federal Trade Commission charges. Match Group shares, they're up now by 2.2%. Recapping, the S&P at a record, up 68, up by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you very much. David Gura in for Tim Stenovec, who's on assignment with Carol Massar here on Bloomberg Businessweek. And we got news yesterday from the White House that President Trump has decided to extend that 90-day pause yet again on those heightened tariffs on China. China very much in focus here in the U.S., of course, as we wait to see sort of what happens with those trade talks, but also playing an incredibly important role around the world. We saw the Brazilian president, Lula da Silva, speaking with the Chinese leader, exchanging their views on international affairs. President Xi calling for coordinated efforts against unilateralism and protectionism. News today also that India and China set to resume direct flight connections as soon as next month. And we're seeing oil playing a critical role here as the contours of this trade war continue to come into focus. It does feel like, in a way, many parts of the world are moving on and increasingly away from the U.S. Let's get to a roundtable now to understand China's goals here, what they're thinking in terms of the role they're playing in the world. U.S. very clear, of course, about wanting a higher tariff world for those looking to sell into the U.S. Shehzad Qazi joins us. He's Chief Operating Officer, Managing Director of the China Beige book, here with us in studio. And from our bureau in Buenos Aires, Jimena Zuniga with us, Geo-Economic Analyst for Latin America at Bloomberg Economics. And Shehzad, let me start with you and maybe just give us your sense of how China is thinking about all this. We've had a series of 3 meetings now, Geneva, London, Stockholm. The pause continues here as we get perilously close, I think, to the Christmas holiday, when people are going to be buying a lot of gifts and are going to be very worried if a lot of these tariffs come to pass. How is China thinking about the kind of trajectory of these negotiations with the U.S.?
You know, when the year began, we would have thought that their primary objective was to bring the tariff levels down and negotiate just about trade. But what we've learned is that they are much more concerned about U.S. export controls, because that is ultimately what hurts them far more than even tariffs do, because they have ways to get around the tariffs. And so what they've done is they've used their chokehold on rare earths minerals and magnets and compelled really the administration to relent and roll back U.S. export controls while also bringing down the tariffs. So 2 wins for Xi Jinping in the last several months.
But what kind of relationship do you think he wants with the United States going forward?
Well, he'd love nothing more than to be able to sell as much as possible and be able to import the things they care about most, the most advanced technology, not just chips, but across the board, right? That's in an ideal world. Now, that's probably not what he's getting right away, but he's getting pretty close to it. I don't think he feels a pressure to do anything more. I don't think he feels a pressure today to say, I'm going to pledge like Japan and Europe did, $500 billion worth of investment, or I'm going to pledge to buy all this U.S. agricultural output the way I did in the past. I think they've demonstrated, Xi specifically, we've got a lot of leverage and we don't need to play ball if you don't feel like it.
I do think it's interesting that they want all the high tech, and yet Beijing is urging local companies to avoid using NVIDIA's H20 processors, particularly for government-related purposes. So yes, but there's always caveats. Jimena, come on in on this, because in the meantime, Latin America is watching very closely, I'm sure, and remind us of the relationship that already exists with China across Latin America and maybe what they hope to even solidify even further.
Thank you, Carol. Yes, Xi and Lula just talked, and they said the relationship is as strong as ever. But so far, the support from China to Brazil seems to have been largely rhetorical, right? They have said, they have shared views on multilateralism and unilateralism on behalf of the U.S., condemning that, and China has been very keen on jumping on this collective criticism of the U.S. But even though Trump's tariffs may be giving BRICS, the bloc that Brazil and China have, along with India, Russia, and other smaller partners, even though Trump tariffs seem to be giving it some mortar, it's still far from operating as a bloc, and it's not really coordinating a response, a collective response to the Trump tariffs.
Jimena, on that note, do you anticipate that's likely to happen? I remember that moment a few months ago when there was a meeting of the BRICS countries. There was this tacit threat that they were going to work more closely together in opposition to what the United States was doing. President Trump clearly irritated, agitated by that, threatened even more punitive sanctions, more tariffs on those BRICS countries as a result of that. What would the catalyst be that would get them to do more than, as you say, just talk about presenting a more united front against the United States?
I think there are two main issues that are blocking a more integrated response, a more coordinated response. One is the very diverse membership of the group in general, and also with respect to the Trump tariffs. They are facing slightly different issues, although they are becoming increasingly closer in the sense that, for example, now Brazil and India are similarly targeted. But, for example, Russia has so far not been targeted with tariffs, although they have other issues with the U.S., of course. But the key thing is that China doesn't really need the bloc as much as the other members of the bloc need China, or would benefit from a coordinated response with China. As Shehzad just said, China has a lot of leverage, has demonstrated has a lot of leverage to push back without offering any dramatic concessions as other countries have done, and the U.S. has backed down. So China does not really need to have the collective weight and heft of the BRICS bloc to stand up to Trump. If it did, however, it could really expand its geopolitical cloud, and it would mean the BRICS would function more as a bloc. But so far, I think China is very focused on its national interests, and as long as it can stand up to Trump on its own and it has the leverage to do it, it is unlikely to compromise its national interest to expand the BRICS heft.
We're talking with Jimena Zuniga, Geo-Economic Analyst for Latin America, out there in our Buenos Aires bureau, and also with us, Shehzad Qazi, Chief Operating Officer, Managing Director at the China Beige Book in studio. All right, so let's shift a little bit to China and India, which I think is kind of interesting. And, just a little headline, as David mentioned, that it looks like India and China set to resume direct flight connections as soon as next month, according to those familiar, as they look to kind of reset their political ties, as the U.S. and India, after years and years of working on improving that relationship, seem to have taken some steps back. China and India, what's China's goal there?
Well, I think, they have an incredibly complex relationship because whereas they trade
it's not a friendly one.
It is absolutely not. They have very serious national security concerns about each other, more specifically India with regards to China. And of course, they're constantly having these battles and skirmishes at the border. Long running problems there. So, I think the trade relationship. So
is any of this real? Or is it just for show?
I think it's real to the extent that they want to do business with each other, but it's not. It doesn't go towards anything beyond that. I mean, India. So let's be clear. India does not want to be seen as a country that's going to counterbalance China and all the rest on behalf of the U.S. It wants to be seen as a power in its own merit, on its own right. And by that token, though, still, they also don't want to blow up their business relationship with China. This is far more complex than I think traditional models of geopolitics would suggest.
We were talking about sort of the gap that might be left if the trading relationship is ruined between the United States and China. How confident is China that it could get Yes, the rare earths, the critical minerals exported to other countries if the U.S. isn't able to buy them. I guess what I'm saying is how sure are they in their ability to pivot to other markets if the U.S. is no longer what it has been?
So they demonstrated, I think, that everybody is desperate for Chinese rare earths. And if you remember, what they did was briefly, they set export controls on more or less everyone so that they could prevent us from transshipping those rare earths right into the U.S. the way, obviously China takes advantage of transshipment. So I don't know if that's really the big concern, because there's such desperation given the chokehold that they have as the sole supplier, really, of most of these things, including some really critical things like samarium, which you need for weapons development, and how dependent we are on that. And by the way, they are not letting that out.
Jimena, I also wonder, if some great deal happens between the U.S. and China after, the delays are done, will Latin America as a whole or specific countries be like, okay, missed opportunity, we're out, because we understand the importance of that U.S.-China relationship, and especially if China gets better terms in terms of tariffs finally?
What do you mean, we are out? Sorry.
Well, meaning that they won't necessarily have such an open door, perhaps, or the conversation lines, between China and Latin America might go away if ultimately the U.S. trade deal and tariff deal that they come together with China is not as onerous as maybe has been put out before, that ultimately U.S. and China come to terms that are good for both sides. So does then China kind of back off again from Latin America?
Yeah, in a way, I think that China is very present in Latin America. If you think of it, outside Mexico, who exports 80% of its goods towards the U.S., China is the main market for most of the other biggest economies, including Brazil, Argentina, Chile, Peru. And so I don't think that Latin America can choose between the U.S. and China. For Latin America, the best would be not to have to choose. And for a while, it cultivated positive, pragmatic relationships with both markets that are important, not only in terms of trade, but also in terms of financing and in terms of tourism. Both markets are critical to the region in different respects, depending on the country. If having to choose, a lot of countries would try to push back a lot, not to have to choose. They would continue to trade with China. They would continue to have financial ties, and they would try to push back on the U.S. because China is now almost as important or more important for many of these countries as the U.S. is.
Any last thoughts, just real quickly?
Well, look, China's going to be a big player, which is why I think when Secretary Rubio took over, his big focus initially was supposed to be to push back on China right here in the Western Hemisphere. That feels like years ago at this point.
It does.
But it's an important objective, I think.
All right. So appreciate both of you.
Yes.
Shehzad Qazi, Chief Operating Officer, Managing Director, China Beige Book, right here in studio, and then out there at our Buenos Aires Bureau for Bloomberg News, Jimena Zuniga, Geo-Economic Analyst for Latin America. All right, coming up, we're going to kind of switch gears, talk a little bit about clean technology companies. David, I don't know if you noticed, but the shares have been on a tear this year.
Yes, absolutely. Again, tethered to AI and the growth that we're seeing there. We're going to talk to the CEO of one of those companies when we come back right here on Bloomberg Businessweek, Bloomberg Radio, and Bloomberg Television.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got the stock market, S&P, holding close to session highs right now, up 65, trading above 6,400, 6,438 right now. We're looking at a gain of just about 1%, on track for a record close. The Dow up 456, up 1%. NASDAQ also at a record, up 268, up by 1.2%. An inline inflation reading, bolstering speculation that the Fed will have room to cut rates in September. The 10-year, 4.29%, with a 2-year, 3.72%. Spot gold right now up 0.2%, 33.48 the ounce. West Texas Intermediate crude, 63.12 a barrel. WTI down 1.3%. And Bitcoin now up by 0.6% to 119,526 a token. Canada's Gildan Activewear is U.S. in advanced talks to buy U.S. underwear maker Hanes Brands. That, according to sources, the transaction could value Hanes Brands at almost $5 billion, including debt. It may be agreed to by the end of the week. Right now, shares of Gilbrands, they are down 3.7%. Gildan, I should say. We've got Hanes Brands, that is up. That stock surging now by 27.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Carol Massar, along with David Gura. David in for Tim, who is on assignment today in Atlanta. One thing we like to watch is what's going on in the green space. Green firms, by the way, in the U.S. have found something of a lifeline in artificial intelligence after being bogged down by high interest rates, shrinking funding, and more recently, President Trump's sharp rollback of support. And our own Bloomberg New Energy Finance team, they have recently pointed out that clean tech companies that have inked deals to support data centers have seen their stocks soar this year, outperforming the S&P 500. And that includes the share price of our next guest. We're talking about fuel cell provider Bloom Energy. It is up 76% year to date, today trading at an all-time high, rising another 8.6%. Joining us to talk about the impact of AI and just the business overall is Dr. KR Sridhar, founder, chairman, and chief executive officer of Bloom Energy. It's a $9.5 billion market cap company. By the way, he was a former advisor to NASA and so much more. He joins us from San Jose. We could go on and on about your background, but we really want to talk to you. Good to have you here. It's been a while. Talk to us about how AI is specifically impacting and driving growth at your business.
Carol, it's such a pleasure to join you. So this is an amazing time in human history where we have not seen the need for power growth anywhere close to what we are seeing today. Let me put it in perspective. The amount of power that the big hyperscalers are saying they need between now and 2030 is equal to all the power every single family home in the US put together would need. There are about 85 million single family homes, give or take. All the power that they use is going to be needed in addition to the power we have today to just power the AI data centers. That's how large this opportunity is. And very clearly, the old model of centralized power plants with transmission distribution simply cannot meet that demand in a timely fashion. That is the opportunity, and Bloom was purpose-built to provide on-site power for the digital revolution, and we are so happy to be in the right place at the right time.
Well, help us understand how the company works. And you mentioned that on-site power, sort of what that looks like. Of course, there's been so much conversation in recent months about perhaps the need to invest more in nuclear power or fortify the grid, bring more power plants online. How do you see your company as maybe not a substitution for that, but a complement to the kind of growth and development we're likely to see here in the power grid going forward?
I think we're going to need all forms of power in very large quantities going forward to meet our voracious, like energy needs. However, in the short term, if you take 5 to 10 years, natural gas to electricity is going to be the single largest contributor to this additionality. What Bloom does is takes natural gas without burning it, without combustion. We extract the chemical energy in it using a fuel cell and make electricity at the highest efficiency, without air pollution, without noise in our generators because they're quiet, solid state, and with very high reliability. For those reasons, if you are in a neighborhood that is going to have a data center, we are your best choice because we don't pollute your air, we don't use water, and we don't make any noise as we generate this reliable power. So you can have the economic advantage that a data center brings to the local community. At the same time, you're not compromising on your health.
So one thing I want to ask you, actually, our Will Wade does, who really covers this space. We were talking about you coming on, and he said, well, wait a minute, let's talk about these fuel cells for data centers. Can fuel cells really work for this? What evidence have you guys seen that it does really work?
So, yeah, that's a great question. And this
Will's
is
a really smart dude. I'm just going to put it out there. He's amazing. But anyway, go ahead.
Absolutely. Look, the issue is we are progressing so fast in our technology at AI speed that some people that have looked at fuel cells 10 years ago and have that notion of who we are don't understand where we are today as a company. We already are powering more than 0.5 gigawatt worth of data center, because our total installed capacity for data centers is more than 0.5 gigawatt. So we're not a concept. We are not a PowerPoint. We're actually producing power for these data centers. And this year alone, we have increased our capacity to 1 gigawatt a year. And we announced in our earnings call that by end of next year, we can do 2 gigawatts a year. That's 2 nuclear power plants worth of power coming out of our factory next year. And you know how long it takes to build a nuclear power plant and actually commission it. So we are no longer a concept. We are a mature technology that is affordable and can compete with other technologies that don't have as good attributes as we do.
Sridhar, I wonder if you could talk a bit about your business model. I know that you've announced deals with other companies, most recently with Oracle, of course, a company that I know is investing a lot in its data center infrastructure. Could you, KR Sridhar, just give us a sense here sort of what those deals look like, what that deal with Oracle is like in particular?
Yeah, David, so our customers, here's what happens. Once we sign a deal with a customer, they either buy the capital equipment from us, and then they also sign up for a service contract. It's a 100% attached rate because we run those units for them and we maintain that, and we offer them the promise guarantee of performance. Now, if they don't buy the equipment as CapEx, we create a special purpose vehicle using financing, and we simply sell them power just like the utility would, except this is on-site and highly reliable and clean. So either way, when we create a special purpose vehicle, that financial investor in that vehicle gives us the upfront money for our capital, and we also have an annuity revenue coming out of service. So we have 2 streams of revenue, if you want to think about it. Installed capital equipment that gets paid to us when we ship the equipment, a continuous service annuity over the tenure of the contract. That's how we make our money, irrespective of whether the customer actually buys the capital equipment or a third party buys the capital equipment and then charges the monthly rate from the customer.
Hey, KR, I'm curious. I'm looking at one of my favorite functions on the Bloomberg. It's the supply chain function, and I'm looking at your customers. Your biggest is, I think, American Electric Power Company, but I'm also looking at Alphabet, Microsoft, sound familiar. These are some of the hyperscalers. Tell me how they're amping up their business, because they're the ones who are doing the massive, massive AI spend, but it looks like they're a very small part of your business. I'm just curious about what's the conversations you're having with them. Are they ramping up to do more with you? That would be very telling.
Yes, the answer to your question is very simple. In the past, these hyperscalers would spend all their capital equipment just on building the data centers, and they could simply pick up the phone and call the utility company and they would provide the power. No longer is that a reality because the utility does not have the amounts of power that these hyperscalers need. So now electricity, power, which is what ultimately the data center needs to monetize the data center, is a supply chain that comes from the common good called the utility. So they have to own that supply chain or they have to procure from that supply chain.
Right.
We are very much an integral part of that supply chain, and we are having conversations with all the hyperscalers today. And you've seen the announcement at Oracle. Expect to see similar things coming soon. Our American Electric Power contract was actually for AWS, which is another hyperscaler.
I wonder if you could situate your company and this industry in the moment that we're in. So we're coming out of an administration that was doing a lot to support or encourage the adoption of alternative energy. Suffice to say, this is an administration that's not doing that. There's much less impulse to do that going forward here. What do you see here as the ideal role of government in encouraging the adoption of technologies like yours? In other words, if you'd like to see fuel cell technology take off, be more widely adopted. What is the role of government in making that happen, if any?
I think a simple role that they can play going forward is the U.S. government, between the various government functions, the military and the intelligence, is the largest procurer of electricity. To be able to purchase electricity from technologies that are made in America. We are a made in America technology. No other country in the world has the technology that we have. So they should embrace us, and they should give us an opportunity to serve the U.S. government, the U.S. military, and U.S. intelligence, and make us a really strong country.
One thing I was also curious about, and I'm looking at your market cap, it's almost about $9.6 billion, and it is this excitement over AI. You know, there's all the money that's being spent, KR, on the build out, and I get that, but I'm just curious, then there's going to be the maintenance, and we might not need as many workers, and, you know, we're all trying to get our head around whether, you know, the boom, the bust part of maybe AI. After the build out, what is the business for you? Is it maintenance? Is it replacement values? I'm just curious.
Thank you for asking that question, Carol. The build out is just the tip of the iceberg. Why would these large hyperscalers spend close to $1 trillion worth of capex just this year alone if all that they're going to do is that build out? That's the training data centers. The inference data centers will be at least an order of magnitude larger than these training data centers, which are the foundation building blocks. Every factory, every bank, every law firm, they're going to have inference data centers close to the edge. And these edge data centers are going to be located where you all live, where people are, where equipment is. And in those congested cities, getting the additional power needed, 10 to 20 megawatts in every edge data center, which is an inference data center, we are ideally suited not just for the large data centers, but for these edge data centers, because we are non-polluting, we are quiet, we are reliable, and we can provide it on site very quickly. So we are super excited about what we think is a really secular phenomenon that's happening here that's going to last for a very long time to come. This is not just a build and bust cycle at all, as far as we see.
So when you say a long time, are you saying decades, or I'm just curious?
At least a couple decades. At least a couple decades.
All right, good to know. We'll stay in touch. Love to hear, because you certainly have a front row seat in terms of this spend and what is going on, certainly all the power that's needed. It's just kind of astounding. Dr. KR Sridhar, he is founder, chairman, and chief executive officer of Bloom Energy. The stock, David, up another 9% in today's session, and it's really been on a tear this year, up about 84%. So
interesting to talk about these companies because we focus so much on the AI providers, those who are making these chatbots and all the developments there. But as we were just discussing, the apparatus that you need to make all of that work, so huge, so sprawling, and I'm just fascinated every time I kind of learn what goes into that, making all of this stuff run.
Right. We just hear about that kind of the big hyperscalers and their spend,
stuff,
but there's a lot of stuff that needs to be done. I'm Carol Massar, along with David Gura. Let's take a look at some stocks on the move on this Tuesday. With us is Bloomberg News equities reporter Norah Mulinda. Norah, good to have you here. Let's start with Paramount Skydance. What's going on?
Yes, Paramount Skydance. We're looking at shares that are up right now, and this is, of course, after we got that rated buy at Guggenheim. They're really citing its growth strategy, and we know that Paramount was just recently acquired by Skydance last Thursday. A lot's happened since then. They got
just acquired, but it was quite a journey.
Oh, for sure, quite a journey, but finally closed, right?
Yes.
But Paramount did acquire exclusive rights to show all events for UFC in the U.S. over the next 7 years. That's a $7.7 billion deal. So that was pretty massive, which we heard earlier reported yesterday. But we are seeing it getting a lift, particularly off of this Guggenheim lift of the its rating here.
Are you a UFC?
I am not a UFC person.
No?
That may surprise both of you
No.
to learn that, but it's a huge deal. I mean, I know that there are lots of people who are UFC people.
Somebody's watching it.
Well, some buddies I know. Let's go to AST Space Mobile.
Yes,
company that I'm not extremely familiar with.
I'm excited to tell you about it. So AST Space Mobile is actually one of the stocks that I cover within the space industry. And it reported earnings yesterday night. And essentially what people are really excited about is the fact that it's going to be launching 45 to 60 satellites in 2025 and 2026. Now, this company is pretty much situated with the likes of SpaceX and a lot of those other competitors. So what they're looking to do is to create a world in which we really have no moment where there's no cell phone signal. So if you're out in the ocean,
I'm excited about that.
A desert, they want us to use.
I like when my phone doesn't work.
So you want to turn it off occasionally, right? You don't want to have service. Well, it seems that they do.
Too bad, Carol.
I know. Yes. I was so hopeful.
But if you look at the stock performance, it's actually insane. The last 2 years, up more than 1,000%. Wow. So if you're an investor in this stock, you're getting some really great returns.
I thought you cover real estate stocks.
I cover everything at this point.
All right.
I cover real estate,
so confused.
Aerospace and defense, and now more recently, space stocks. So
how close are they to doing this?
I mean, I think that's the question that everyone's really racing to do this. People are saying in the next couple years, but I mean, I think it really depends, especially because there's a lot of regulatory hurdles and all the other things that you have to get through in terms of timing.
Very crowded in space, by the way. A lot of satellites.
All fall down? Like, don't you ever think about how crowded this?
Imagine just a complete blackout.
Give me a call if that happens. Since you'll have service, you can let me know.
I'll let you know. Hey, David. Yeah. Should we talk Open Door Technologies?
Open Door Technologies, and of course, this is another one that I have in focus. One of the companies that I cover in the real estate space. We know it's really been at the center of the meme stock storm, the rally that we saw last month. Eric Jackson, of course, he is a Toronto-based hedge fund manager, a pretty small hedge fund there, but he's running it.
You and me talking
he's been
about
on
this
with us in the past here, more recently. But what news we're getting today is not about Eric Jackson, but it's about Anthony Pompolino, and he's a CEO of a SPAC known as ProCap Acquisition. He's been tweeting about the fact. Do we call it X tweeting? Can we still say tweeting?
Sure.
I don't know.
We got
but he is saying that he bought shares of the firm, and of course, this is giving them a welcome lift today, up about as much as 16%. But I mean, he has a pretty strong following. 1.7 million followers on X, and he writes a daily newsletter to about 260,000 readers. So he has a pretty broad scope, and we're really starting to see the stock getting some celebration here.
Talking SPACs again. Here we are. Cyclicality
that makes me
SPAC
nervous.
talk.
It makes me cyclicality.
I thought we were done, but now they're back.
Say that 5 times fast.
Yeah.
What's crazy is, no offense, it's a $2.41 a share stock, and it's up 10 cents, which is more than a 4% gain.
Right, but we're like, spectacular.
I know. All right. Good stuff. Thank you so much.
Nice to see you.
Good to see you.
Appreciate it. Norah, Mulinda. That, of course, is our Stock Movers podcast. Check it out. 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcast. Doesn't it feel a little calm today?
It does. Well, it does feel like we're in the, I don't call them the dog days of summer, but mid-August.
I know. We haven't gotten the August swoon yet, have we?
No. I may miss that.
You may miss it. I may miss that too. I always miss it when I'm on vacation.
Tim can handle that one for us.
All right, let's get a check on the markets right now. The S&P 500, folks, up about 65 points, good for a gain of 1%. I think we're at a record on the S&P, and the NASDAQ 100 up 280 points, a gain, David, of 1.2%.
Well, for those of you watching on TV, up next is The Close. For those staying with us, Bloomberg Businessweek continues on radio, on YouTube, and originals as well. A lot more to talk about, Carol. Markets and the economy coming up here on Bloomberg.